In the part 2 of this series, I will be discussing on the major problems in policy transmission and why RBI introduced reforms in the lending rate system with special focus on prime lending rate system and benchmark prime lending rate system. So we know that in a bank-dominated system like India, the transmission of bank lending rate is a key for the successful implementation of monetary policy. But there is a problem in that successful implementation and policy transmission. What is the problem? The policy transmission was not very effective. Why? Because the bank adopt various methods in calculating their cost of funds. The transmission of bank lending rates has been impeded by various factors. The one major being the opacity in the process by which banks sets their lending interest rates. To address this concern, RBI has been refining the interest rate methodology of banks from time to time. Bank lending rate has been evolved since 1990s in a perspective of improving the monetary transmission and linking the bank lending rates directly to the market determined benchmarks. Let's understand and assess the monetary transmission under the bank lending rate system, which has worked under the four regimes. In this slide, we will see banks lending rate system since early 1990s. RBI first introduced prime lending rate system in 1994 as a bank's lending rate system. In 2003, prime lending rate system was replaced by RBI through benchmark prime lending rate system BPLR. Again in 2010, RBI introduced a new bank's lending rate system called a base rate system, replacing the BPLR system. And the latest lending rate system, which was introduced by RBI in 2016, is the marginal cost of fund-based lending rate system, MCLR, which has replaced the base rate system of 2010. Now, let us understand and assess how monetary transmission under banks' lending rate systems has worked under these four regimes. Prime lending rate was the first in the reforms in the bank's lending rate system. It was introduced by RBI in 1994. Prime lending rate was the interest rate charged from the prime borrower or the most credit-worthy borrower of the bank. In the system, the credit limit of commercial banks were reduced into three slabs. First slab was advances up to Rs 25,000. Second slab was advances between 25,000 and 2 lakh. And third slab was advances over 2 lakh. The first slab and the second slab, the lending rates were regulated. But for the third slab, RBI deregulated the lending rates for credit over 2 lakhs. Banks would determine their own lending rate for credit limit over 2 lakhs. So, for the third slab, banks were required to declare their prime lending rate based on their cost of fund and the transaction cost, in accordance with their risk-reward perception and commercial judgment. Along with that, it was mandatory for the bank to announce the maximum spread over prime lending rate for all advances. Here the important thing to note in this prime lending rate was the first slab and the second slab were basically for a small borrower to give them loan at a regulated rate fixed by the bank in a subsidized form to protect the interest of the small borrower borrowing up to rupees 2 lakh. But for the third slab, lending beyond 2 lakh were completely deregulated by RBI, and banks would determine their own lending rate for credit limit over 2 lakh. Another important feature of prime lending rate was the prime lending rate was expected to act as a floor rate for lending above 2 lakh. That means all loans and advances given above 2 lakh must not be less than the prime lending rate. In 1997, another important feature was added to prime lending rate system, that was prime term lending rate, where banks were given freedom to announce separate prime term lending rate for term loan of 3 years and above, whereas prime lending rate remained applicable to the loan taken for short-term purposes. The experience with the working of prime lending rate was not very satisfactory because prime lending rate acted only as a floor rate for credit above 2 lakhs, but wide-scale misinterpretation were registered with the banks charging lending rate far higher than prime lending rate. Both prime lending rate and the spread charges over it were found to be rigid and inflexible. Along with that, prime lending rate varied widely across banks. Benchmark prime lending rate system. It was introduced by RBI in April 2003, replacing the old prime lending rate. It was considered as a reference rate which comprised of cost of fund, operating expenditure, minimum margin to cover regulatory requirement, and profit margin. Under benchmark lending rate, banks were asked to discontinue the tenure-linked prime lending rates, but they were allowed flexibility in pricing of floating rate loans using market benchmark and spread. This system aimed at increasing transparency and ensure appropriate pricing of loans. Benchmark lending rates suffer from a problem like increasing competitive pressure, which were forcing banks to resort subprime lending. The problem of lack of transparency was also seen in the system as banks were arbitrarily settling the lending rates and the benchmark rate for pricing of floating rate loans, making the contract totally non-transparent for the borrowers. The next was it suffered from a downward sticking trend where banks were very much enthusiastic in raising the lending rates during upturn in the interest rate cycle, but they were very slow in bringing the interest rate down when there is a downturn in the interest rate cycle. And the important criticism of cross subsidization in lending. It was often seen that a large loan were offered to highly rated borrower at a lower rate in benchmark prime lending system. The rate were lower than the current benchmark prime lending rate due to little risk, but such sub-benchmark prime lending on the large scale has created a perception that borrowers are being cross-subsidized by retail and small borrowers in benchmark prime lending rate. If you have any question on this presentation, please put your question in the comment section and like and subscribe my channel to get further notification. Thank you so much.